Hey guys, virtual investor here. Hey, if you're clicking through YouTube and you see all this clickbait for the real estate market crashing, for prices dropping huge and all that, you would think that the real estate market is absolutely collapsing. But facts are facts, and these people are letting the facts get in the way of a good story, unfortunately. So in this episode, we're going to talk about what's really going on in the market, where prices are, where they're heading, where rates are, where they're heading, and what the most likely scenario is here for finishing out 2023 and going into 2024. I'm doing a little screen share here. All right. So if we look at Redfin here, the median sales price for 2023 through August is up 3% year over year. And that's even with mortgage rates being up 1.8% higher than they were a year ago at 7 point currently. 3% increase year over year. Yet all we're doing is seeing like Reventure, whatever that guy's YouTube channel is, talking about the market crashing, which he's been talking about for 3+ years. He gets 1 million views and all this because fear porn works. But the facts are the facts. The market is still really, really good despite high interest rates. Despite the fact that people don't have as much money as they used to from all that pandemic money, that helicopter money that came in everybody's savings accounts. They're using it up. They're now hitting credit cards. And that's a factor. And that's something we got to look at moving forward. But right now, the market is up. I anticipate it's going to be up next year as well, because I see rates retreating potentially next year, like they did for a bit of this year before heading up here again at the end of the year. But that's a story still to be told. But let's dive into the numbers here. So if you look at the top 10 metros with the fastest growing sales pace, again, you're going to see pretty much a repeat of what you saw over the year before, with Florida leading the way, Miami at 24.4%. And then you got Myrtle Beach, Tallahassee, Tampa, Florida. Then you got Charleston, South Carolina. So you got 2 South Carolinas, Myrtle Beach and Charleston. Again, all these are destinations for retirees as well. So you got a lot of retirees, a lot of people that maybe moved up their retirement plans and they've moved down here. A lot of families like myself that moved down here. And again, you have St. Petersburg, Florida, Rockford, Illinois, San Jose, California, Fayetteville, North Carolina, and Chattanooga, Tennessee. The Sun Belt is running away with the growth here. If you look at the number of homes for sale, it's down 18.6% year over year at 1 million for this year in entirety through August. The number of newly listed homes, 503. The number of homes currently on the market is 518,620. Over a week, it's actually an increase of 1.9%, almost a 2% increase. You can check Altos Research with Mike Simonson on that. He has great data he puts out there every single week. It's a must watch and read for all of you guys out there. So we see the 30 days is the median days in the market. It's up 4 days from last year, which was 26. And month supply is 2, which is the same year over year. We had 2 month supply last year too. So we're at virtually the same amount of inventory this year as we were last year. And remember, healthy market is 6 months and we're nowhere near 6 months. So the number of homes that sold above listing price is 36.2%. That's down 1.5% year over year. But again, we had much lower interest rates last year. So the fact that it's only down 1.5% is pretty impressive. Homes with price drops is 18.4%. That's down, right? So there's less home price reductions this year than last year. But that can be, that's really, I would attribute it to that really quick increase we had in interest rates, mortgage rates last year that made people hit the brakes quicker. This year, they kind of got used to it, so it's not as much. So less price drops, less panic by the sellers. And we look at the sale to list price, it's basically selling at list price. Everything we sell is 99.9% of list price. So it's up a little bit more than it was last year. Again, not because the market's any hotter, but just because I think people are more used to the mortgage interest rates and the sellers are sticking to their numbers a little bit more. I think that's what skewed these numbers up here a little bit here. The 10 most competitive cities in the U.S., San Jose, California, because everybody's fleeing other parts of California, being San Francisco, Oakland, Los Angeles, the big cities that are issues. They're going to San Jose, and they're going to go to Sacramento, as you see over here. Fort Wayne, Indiana, Omaha, Richmond, Virginia is surprising. Anchorage, Alaska, surprising, and Rockford, Illinois, but it was affordable. So that's why it's competitive. Cincinnati, Ohio, again, affordable. Littleton, Colorado, a little more expensive. Fayetteville, North Carolina, very affordable. This is where people are moving from and where they're going to. Obviously, Florida leads the way with 29,000 people that were searching to move to Florida. Where are they leaving? New York, 24,000, and 41,000 in California. They are exiting. Californians are exiting multiple places: Texas, some Florida, a lot to Nevada, even some to Washington and other different states in here, Tennessee as well. But you see the hot areas: Florida, South Carolina, North Carolina, Tennessee, and Texas. Those are your hottest states. And then Maine too, because a lot of people like the mountains. They want to move up there. So it's a lifestyle thing. So you have a percentage of people that want to be in the colder weather, enjoy the mountains and privacy. And then the people that like the warm weather and where no state income tax. So that helps as well, again, especially for Florida, for Texas, for Tennessee, and Nevada, and others. There's a few others. Washington's actually a zero income tax state too, even though they hit you in other ways up there. That's where people are moving from. People moving to, again, Sacramento, California, away from Los Angeles and away from San Francisco and other cities there. Inbound here, again, Florida's going to lead away in the Carolinas and Texas, and then Maine. And where are they moving from? California, New York, California, Washington, D.C., again, the swamp. These are the highest taxed and worst run cities in the country, probably on planet Earth too, or close to it. Chicago, Louisville, Kentucky, Boston, Hartford, Connecticut, again, all big cities. Detroit, Michigan, Denver, which was ruined by Californians moving there. So Californians, stop moving from where you were and ruining other places. Stay where you are and just ruin your own place. Leave the rest of us alone. All right, what else we got there? I think that's it. And that leads me to why I believe now is a great time to be buying in real estate. So instead of being very fearful like some of these other channels, like Reventure, whatever the heck his channel's name is, Reventure Consulting, I think, you actually want to be buying right now, because a lot of investors have moved, going away. There's a lot less investor demand. I think investor demand was down 31, and buyer demand by people looking to purchase the properties to live in is only down 19%. So there's that gap to fill there. It's a huge opportunity for investors. And what you can do, instead of using your typical 75% of after repair value or 70%, knock it down, go down further. I'm going to 65% of after repair value on my number minus repairs. So simple math here, 100K house after repair value at 65% is 65,000. It needs 25,000 repairs. I'm down to 40,000. If I want to wholesale it, I got to be down to 30,000 or 25,000 to be able to wholesale that. If you want to look at it, if you want to fix and flip and ensure yourself more profits, 65,000 minus your 25,000 renovations, your 40,000 you can pay. If you're a buy and hold person, 65,000 minus 15,000, because you're not going to put the same amount of repairs in a fix and flip that you're going to do it in a rental. And so you can afford to pay 50,000 for that property. So that's the difference. The buy and hold guys have the biggest advantage right now. And they might be able to get prices cheaper than that, and really be able to pull cash out. Because if you're in it for 50 and you put 15 into it, 65,000, if you use a 70 or 75% loan to total value of 100K property, you're gonna be able to pull a little bit of cash out, or at least have no money into it, which would allow you an infinite return, which would be phenomenal. Infinite returns are the best. No money into a property that's rented, that a tenant pays the mortgage, and you collect $300 a month, say, of monthly cash flow for the foreseeable future. It's a beautiful thing. So now is a great opportunity. Now is the best opportunity for you to buy on online auctions, because the auctions, the banks want to get rid of all the properties by the end of the year. They want to reduce their books, make their books look better, get rid of the bad debt, and they will take much lower pricing right now to get it off the books at the end of the year. We get about 40% of our inventory between October and February. And the biggest months we pick up October, November, December, and into January, and even in early February before we get to the spring market, because they're looking to get rid of properties. So if you're looking to invest and looking to buy bank-owned properties, now will be the time to sign up for our course. We can get you VIP buyers. So you don't have to worry about using your credit card to put a credit card hold on when you're bidding on these properties. That's www. Sign up there, join the program, and you also can jump in and make a lot of profit at this time. All right, guys, we will catch you on the next episode here.